Before we get to the phones, let's welcome Clinton Wilkins to the show today. Mr. Wilkins, how are you, sir?
Thanks for having me, Dan. I'm doing great.
So you listening to Mortgage 101 on the weekend because, well, I was the special guest star host for that. And you boldly made the prediction that the Bank of Canada was going to drop its key interest rates by a 25 basis points. And lo and behold, they did.
I'm not falling on my sword today, Dan, so it's great news to be able to report. I think for homeowners, obviously good news. Reducing the cost of borrowing is very positive. I think really the reason the Bank of Canada reduced this key rate, and economists were really waiting with bated breath for this announcement today. One was the job numbers. Two, inflation is below target, even when we take into consideration things like the carbon tax and just the general state of the economy. We're now in a situation where we can start spending some more. I think we can be cautiously optimistic. I did host a webinar with a senior economist from Bank of Montreal earlier this week for industry in Nova Scotia and in New Brunswick. And they're projecting that we're going to see the key rate down 75 basis points by the 1st of January. So I think we're going to see a few more cuts here along the way.
So this is just the beginning, right?
This is just the beginning, and I think we can be cautiously optimistic that many mortgage rates will start with a 3. And I think optically, Dan, it's motivating for consumers. Existing homeowners that have their mortgage coming up for renewal, it's great news. If you want to refinance, or if you're looking to buy a new home, having the cost of borrowing being less enables you to have more dollars in your pocket monthly to pay for things like food and gas, which still is, we've suffered from the inflation, but now we're basically in the new normal.
Clinton, what does this mean actually to somebody that already is in their mortgage? Let's say they have a variable rate, a 25 basis point drop. Like, are we talking tens of dollars? Are we talking hundreds of dollars a year? What kind of savings does this create?
Well, anybody who has a variable rate mortgage, depending on how their mortgage is set up, either their payment's going to start going down, Dan, or their amortization's getting shorter.
Right.
The actual monthly savings is really based on how much they owe and what their amortization is. So I can't tell you dollar-wise how much people are going to save. 25 basis points is not a lot, but for some people, that can be thousands of dollars a year, depending on what they owe.
You and I were talking about this on the weekend, Clinton. You suggested, and I think it kind of makes sense, that with the Bank of Canada doing what they did today and the potential of them doing it 2 more times, that those that have been kind of on the sidelines and watching and waiting, this may motivate them to pull the trigger on a deal.
I think it certainly will, especially knowing that we're going to continue to see some cuts here, hopefully in the future. The Bank of Canada has not reduced the key rate in 6 months. March was the last time we had a cut, Dan. So we're back now on this reduction. And typically what happens is when the Bank of Canada starts reducing the rate, they'll continue reducing the rate. So I'm cautiously optimistic that, the economists are right. But again, anything can change tomorrow.
Right.
Things that are going on in the U.S., things that are going on in our economy. There's many factors that come into these Bank of Canada decisions. And really, the governor of the Bank of Canada, they don't know until today what's going on. Yes, it was highly speculated this week that we're going to start seeing a reduction. But push comes to shove, they really don't know until this announcement is being put out.
Do the banks follow this? Do you think that all the major lenders are going to follow this reduction, or are they going to do their own thing?
The banks will follow. So most banks' prime will be 4.7%. Some will update it immediately, Dan, so within the next, 24 hours. Other lenders will update it for the 1st of October. It just depends, what that lender's policy is.
Clinton, very quickly, a peek into the market. What's it look like out there right now? Is where are we at, buyers, sellers wise, and is there inventory available?
Certainly lots of inventory. We're seeing more and more listings come up. And we're more in a balanced market today, Dan, than we were before from a real estate perspective. I'm not a realtor, but I'm, a professional looking from the outside in. And I can tell you that there's certainly transactions happening. From a purchase perspective, I would say there was less purchases happening here in 2025 than we saw maybe in previous years. But having a more balanced market, I think, is good for everyone. There was just too much stress and strain on the market, including from our side of things, Dan. Like, it's tough when we're under this much pressure to be able to do these transactions. Having it be more balanced, I think, is good for everyone. And I can tell you, there certainly are a lot of buyers out there with pre-approval. So I expect we're going to see some offers and a very busy fall going into the end of the year.
Clinton, is always a pleasure, my friend.
Thanks for having me, Dan. Have a great day.
That is Clinton Wilkins. He's our mortgage expert. 25 basis points reduction in the prime lending rate down to 2.5%. That announced just a couple of hours ago. And Clinton says that it is only the very beginning.